We're live. Good morning. Good morning from my allergies are raging. Apologies for the voice today. I don't know what's going on, but good morning. Welcome to Trading with Sergio. Every Monday, 10 a.m. Pacific, 1 p.m. Eastern. Every Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Welcome to my world. How's it going, everybody? Hope you all had a good weekend. Back at the ranch, what's going on? A little bit of a sell-off, nothing really. Market's crawling back. And I actually have put on quite a few positions today, and I will share those shortly. Well, we have found a bottom. It looks like VIX is contracting, which indicates upside. We're struggling at 5,700 a little bit, which is expected really after a massive rally from the secondary low that we put on about 5,100 after we initially pumped up with the tariff delay, 90-day tariff delay. The second liberation day is coming up July 4th, I think, which coincides with the 4th of July, right? Independence Day. So we'll see. We'll see how that's going to go. There's a lot of cross currents going on. Pretty confusing picture, really, when it comes to macro. Bonds are selling off. Gold is rallying. Gold is saying we have inflation. Bonds are saying we have inflation. Oil is saying we don't have inflation. Oil is cracking down to $56, $57 a barrel. Hopefully that'll help with inflation. Right? Who doesn't buy gasoline these days? So unless you have an EV, of course. But a lot of mixed signals, a lot of cross currents, difficult. I'm not having a difficult time reading the tea leaves, but day to day, you can't look at these things day to day. You just put on positions and you either take your losses or you take your gains. Unlike I didn't take my solid gains on TLT, now that's selling off. Interest rates are going up on the 5 and on the 10 and 20 year, where all the mortgages are based on, car loans are based on. So interest rate, the interest rate market, bond market is telling a completely different picture or story than the stock market is. And that's where we are. I mean, we have a massive news obviously coming around this Wednesday, Fed decision on interest rates. Until then, probably it'll be quiet. A bunch of earnings again. About 20% of the S&P 500 is coming out with earnings, and that's what's left. All the Mag 7 has come out. A couple of them were great. A couple of them were not so great, not so good actually. So they've been selling off like Amazon and Apple, but Microsoft and Meta blew out their quarter. Said AI spending is continuing. Netflix new all-time high on the Mag 7. Tesla kind of struggling, but I'll go through my charts. I added to my put debit spreads today. I actually rolled a couple of them. I took a tiny little gain on one and added to the other ones. I'll put up the positions. Another thing is, as you all know, I post all my open positions every Monday, Wednesday, and Friday on the community page. How do you get to the community page? You go to the YouTube channel. They're in the middle. There's a row that says video, shorts, live, whatever. So you swipe left, and then the last tab is community page. I'm as transparent as anyone out there. Wins, gains, losses. Had a really nice trade going on in TLT. I think I was close, probably over $5,000. I was up, and then now I'm only up $1,000. So, but I put that position on with the expectation of lower interest rates because we're going into some sort of slowdown, maybe not a recession. Although all the macro news that's coming out has been strong. We had our first negative GDP, although it had a lot to do with pushing forward the imports, obviously. But every other indicator, such as consumer confidence and the manufacturing index, ISM index, they're all going the wrong direction. Market pumped up strong on Friday due to the employment numbers that came out. More jobs were created than expected. That means the economy is not slowing down. I'm not buying any of this. I'm going with what the bond market is telling me. The bond market is saying we're going to push interest rates up because inflation hasn't been put away. If the bonds keep doing what they're doing, rates keep going higher, there is a headwind for the market. I mean, a lot of people already are saying, well, yeah, that's the bottom. We're going to all-time highs. I don't think we're going to all-time highs, but that's my opinion, and that's why I put debit spreads on. I could be right. I could be wrong. It's just another trade for me. It's not going to make me or break me because my size and my allocation of net lick is proper. So, to me, we have a little bit of resistance here, obviously, although we are crawling after we had a pretty sharp downside opening, up down about almost 1%. Now we're only down, I don't know, 1/3%. So I'm going to look at the tea leaves. I'm looking at the tea leaves. It's the same picture. Nothing has changed. The market was expensive at 6,100. It tried to price in a massive slowdown, if not a recession. And then now recession picture is off. We're back to where we were on Liberation Day on April 2nd, right? So all that from 5,700 down to 4,800 just got negated as if it didn't happen. All this tariff stuff is really becoming a joke to me, to be perfectly honest. The other thing all of you need to understand is there's a lag factor here, right? The macro numbers that we're getting from the Fed and everywhere else have a lag built in. And the unemployment numbers are always revised, so I don't know why the market liked them so much. But the point I'm trying to make is the lag factor is definitely should be considered. What is a lag factor? Okay, well, everybody rushed, all the companies rushed and tried to get as much merchandise as they can in before the tariffs kick in. Well, what happens then, right? The administration is saying we're talking to everyone. For example, today Japan said no, reciprocal tariffs need to be going away, although India says we can agree on 0 tariffs on steel and auto parts as long as US lowers the tariff rates. I mean, it's just like it's getting to be a ridiculous, really mumbo jumbo here. Obviously, the big news was last Thursday. China said, yeah, we may be talking. You guys keep ringing our phones. We're not going to talk about any tariffs as long as those tariffs are taken to 0 first. Okay. I mean, look, the T word has become the most favored word of everyone in the market. Yeah, that's where we are. So gold had sold off for a couple days sharply, but then we're right back up. We're taking another leg up, it looks like. Bonds where interest rates were going down. Now the bond market says, oh no, hold on a second, that's not going to happen. On Wednesday was the expectation. No interest rate cuts on Wednesday. And I think the Fed's just going to say, look, we're data dependent. The economy looks pretty decent. We don't need to cut rates. On the other hand, Trump administration wants lower interest rates. Well, they cannot talk the bond market down. They just can't. The bond market is too big for anyone to, I'm not going to say manipulate, but to push around, okay? There's 37 trillion of IOUs floating around. The largest holder is Japan. Second one is China. They're liquidating some of their treasury assets, dollar-denominated assets. I don't think it's going to make that big of a difference, but the bond market in itself is looking forward to this $9 trillion of refinancing that we have to do. We have $9 trillion of notes and bonds coming due this year, okay? Out of the 37 trillion that we have, which is continuously going higher, by the way. Another 80 days, we're going to be at 38 trillion. Regardless of what Doge is doing. I don't think Doge is going to find trillions and trillions of dollars worth of waste and fraud, although they are doing a good job, they're finding some of it. It's not going to be into the trillions. So how do we fix this problem? Well, the debt keeps going higher, although the Fed balance sheet keeps going lower, so liquidity is getting sucked out of the marketplace. That's another reason we had there's a direct correlation, by the way. If you guys look at a M2 growth or chart versus what the markets have done, including Bitcoin, there's a pretty solid correlation between that. So Fed, I believe, is going to hold the rates. They're going to say we're data dependent. And obviously Trump is going to throw a fit and he's going to go, I'm going to fire you, to Jay Powell. Jay Powell says, go screw yourself. You can't fire me. Look, all these things, all it's doing is just creating uncertainty and volatility. Although volatility is kind of subsiding, still on VIX, we're at 22. So 22 is pretty high compared historically, okay? And when VIX is high, obviously implied volatility is higher, and every option is getting priced differently. So if you're trading options, you really, really have to be careful. You really have to understand the Greeks. You have to know what you're doing. You can't just YOLO into some zero DT and expect to make millions, although some people, I'm sure they did. But the point I'm trying to make is if you're a put seller, call seller, you need to figure all this stuff out before you just take those trades. And what else? Yeah, that's about it. I'm just trading the way I do. I'm going to do what I do. Can't get pushed and pulled with every bit of news, obviously. Positions I put on, some are long-term, some are 40, 50 days out. I will manage, right? That's it. I will go to my positions in a second. But again, so another thing, I see a lot of the members here. We have a fantastic community that we're building on Telegram. If you do choose to become a member, please click join. You'll become a member. You email me, Sergio@sergioavedian.com. Let me put up that email address, and then I'll send you the link of the Telegram chat group where I live post my trades. None of this is trading and financial advice, with that disclaimer. If you're going to tag along, do it at your own risk. Make sure your account size is able to handle this. Your allocation, your risk taking. What I do is not for everyone, okay? And plus, I have the time to manage those positions. If you're going to have the attitude of set it and forget it, it doesn't work like that. Trading doesn't work like that. If you have any questions, please put them up. I will also put up the link of StreamYard if any of you want to come on and talk about stuff. You're more than welcome to. What else? That's about it. I mean, trading is trading. Luckily, I was able to buy some stocks that I wanted to buy during that pullback. In my long-term investment portfolio, I have 6 stocks. Actually, I have 5 now. I had bought Kava. I'm holding Kava. My cost is about 82. I was in it last year. It's actually a year and 5 months. It was a 5-bagger. Got out. Stock got it really to 175 range. I'm getting back in about 82 range, and I was lucky enough to buy some shares. In my investment account, I'm just doing shares. It's about 97. No, I'm just going to hold it and start probably selling some calls. I'm long Unity Software. I was long ROBN, which is 2x ETF of Robinhood. Like the company quite a bit. 45 seems to be a little bit of a top going on here. I bought them in the literally mid 7s, and it doubled literally. I mean, that's lucky. I bought Google about 142. We're about 165. Those are the stocks I wanted to buy. I had orders in, and then they all got filled. Soxel I bought about 788 range. That's about 13. I'm holding that. That's the 2x ETF of SOXX, the semiconductor index. I bought some Nike about 52, 53. I think it's about 58. So all the shares I bought in my investment account are doing fine. My trading account is completely different than my investment account. I suggest all of you do something like that. You know, don't combine the two. You know, my long-term investment account, still trading, but then much longer term periods, and I don't do too many options in there, unless maybe I'll sell some cover calls once in a while. I may sell, you know, some puts to add to my shares. I allocated about 35% of that portfolio was all cash. I'm hoping for another pullback to add to the same positions. Maybe I'll add a couple of different names, but I tried to keep those maybe 6-8 stocks max, equal weight, to be honest with you guys. So if I'm allocating 35% of the portfolio, I don't do with shares. Dollar wise, it gets allocated across the board, the same dollar amount. So if I'm going to buy $1,000 worth of Nike, I'm also going to buy $1,000 worth of Google and Kava and Unity software or whatever. So that's the way I manage that account. I'm trying to have long-term capital gains in that account, as opposed to all short-term capital gains in the trading account. I mean, trading account is not small. I mean, it's, to some people it's small, to some people it's extremely large, I guess. But trading is trading. Trading is all short term. I deal with options, and mostly options, other derivatives, some futures, some stocks, you know, shares that I buy, and I'll put the positions up in a minute. You guys will see what I added since last Monday's trading with Sergio, or since Power Hour. Yeah, that's where we are. So good morning, everyone. Vic, good morning. Traveler, good morning. Eric, hey, good morning. Takey B, good morning. The other Vic, good morning. Luis, good afternoon. Good morning. Mojotronics, puts have worked, but my call buys have bit me in the ass. Yeah, because you're buying them and holding them. Stocks are to be bought and sold. Options are to be absolutely bought and sold. You can't just buy and hope for the best. If you don't understand that part, yes, the risk is limited. It's what you put up is all you can lose on options. If you're doing directional bets, you're gonna lose 95% of the time. 90% of the time, the premium erosion is going to get you. And when you are wrong, you're wrong. You got to take losses. Unless you learn how to take losses, you can't manage options. You shouldn't even be touching options on a directional side. Just because they're cheap or this or that doesn't mean anything. They're going to hit the wall. They're going to expire worthless. Because you have experience now selling puts, well, most of the time those expire worthless. But you know, that's a different story. So let me put the link up as well. If any of you want to come on. There's that link. Cool. Okay, so let's go to, hopefully you guys can see this. Let's go to the charts, and I'll go through some charts, especially to the positions now. Okay, so hopefully you guys can see this. All right, so as you guys can see, position screen is full. This will go up today on the community page. Let's start from the top. What do we have? We have July. We have 225 of the July 45 GGLL. This is the 2x ETF of Google calls. I have sold May 16 calls against it, expiring most likely worthless. That position has been on for at least a couple, 3 weeks now, maybe a month. So these are the put debit spreads that I put on initially. Overall, in the position, I'm down about, it looks like, what does it say? About down 1,600. No problem. Today, I added to, I tried to actually sell them with profits this morning, but then they didn't get there. No problem. It's a little bit of a hedge for my long-term investment account as well as this, although I don't mix it, but I do put some hedges on in this account. Meaning, like, if I'm losing in this account, I'm gaining in the other account, so it doesn't really make that much of a difference. I'm trying to add to these. So what do I have? Let's go through the positions. I have June 20th expiration, 5,400, 53.80 put debit spread. My cost on those is just a touch under $5. So it's like a 4-to-1, right? 5,400 It's pretty far, it looks like, but then with the market volatility, it's not actually. The expected move in those is between now and June 20th on SPX is about 370 points. So that's quite a bit. That's about 6%. I had put on 5,600 to 5,575, put debits red. I took a tiny bit of profit on that, couple $100. Closed those. Now I'm opening and adding to. I'm up to 10 lots. On the other ones, I'm up to 15. I'm up to 10 lots of the 5650. Again, June 20th expiration, 5650, 5640s. I started putting them on about 325, 340, $3. And those were in the money, actually. On those, actually, I have a little bit of a profit of like $50 profit, but no big deal. This is the biggest problem I have. Here's the TLT trade. It's the same trade as I had on before, okay? And what was that trade? That trade was going out to March 2026, short the 85 puts, long the 95 calls, and short the 110 calls. So I had put those on with about 275 credit to the put side, okay? Well, TLT rallied from after I did it all the way to 90. Literally, I had like a $5,000 gain on this position. Now I'm down to $710 gain. Still profitable, but the reason I did it in March is just give me some holding power, to be perfectly honest, and that's the reason I did that. What else we have? So it's down to 87 now. I'm short the 85 puts. Still have a profit on. You know, the calls, the long calls and short calls, actually, it's like a 95, 110 call debit spread. That's experiencing some decay, but then those are March 2026, going out about 10 more months. I'm going to hold on to the position. I won't let it get to red because the bond market's saying, like I said, bond market's not buying any of this. Bond market's saying, hold on a second, there's something wrong with this picture, and they're selling off. So when TLT is selling off, it's an inverse indicator. That means interest rates are going up. TLT is going up. That means interest rates are going down. So that's where we are. Today I added a bunch of puts on Uber. Earnings are out before they open in a day, actually May 7th, in a couple of days. So I'm buying, I bought 25 so far, but I have, I think, 15 more to go. I'm buying them every nickel down. I started about 280 or 285. I'm buying the June expiration again, the regular expiration, 46 days to go. 80 puts. I bought 25 of them so far. I have another 5 to go at 260, another 5 to go at 255. And what I'm doing is I'm trying to do a little bit of a implied volatility arbitrage. So the puts that I bought, they're 46% IV. Since earnings are coming out, the short term, May 9th expiration, which is 2 days after earnings come out, are about 101 to 105. So I'm buying the puts and trying to sell the 76. So I'm buying the long 80 puts, 25 of them. So I'm trying to sell the 76, 75, 74, 73, 72 puts. I put the orders in. They're a little higher. The orders are in. It has to pull back in order for me to get those off. But I'm going to keep buying the puts. I have one more day. Tomorrow I'll probably get those off, the May 9th. So also you could look at it as like a vertical debits, put debit spread. But okay, so what's going to happen? Earnings are going to come out. Stock's already pumping. It's 86.40. Its all-time high is 87. I don't know anything more than anybody else does, but I'm just going with the technicals. At 87, I think we are overextended, and even if the earnings are good, unless they completely blow them out of the water, you know, the other puts that I'm gonna definitely sell the puts, the short-term puts against it, because I cannot resist 102, 107 range IV, implied volatility on those. And I'm going to stagger those. So 76, 75, 74, 73, 72. So If the stock keeps going higher before the earnings, fine. I'll buy more puts, the June puts, and then sell. Definitely I'll be short these, if not today, by tomorrow. I may actually lower the price by a nickel on all of them and get them off, but we'll see. And last but not least, I bought 1,500 shares of WeRide, WRD. It's a Chinese AV company, autonomous vehicle company. They're expanding. They're basically the Waymo in China. There's a couple other ones, but I chose this one. We'll look at the charts, why I'm doing what I'm doing. The other thing I did is I bought 1,500 shares with an average of 715. We're at about 687. However, I put a short strangle on, or covered strangle if you call it. I sold the June 20th, 5 puts, and sold the June 12.5 calls for about 76 to 80 cents. So I'm willing to buy 1,500 more shares if it's below 5 by June at 425 range, 420 range, because that's how much premium I'm taking in. So I'm selling the calls and the puts. So I'm selling a strangle against my shares. If you do it without the shares, it'll be a naked strangle. If you do it with the shares, it'll be kind of a covered strangle because I own the shares in case it pops. Earnings are out on May 15th. I don't think it makes that much of a difference as far as earnings are concerned. But that's it. Those are the positions. And let me go to the front. If you guys have any questions, I'll post these on the community page coming up. Let's see if there's any questions. Hello, Lynn. Hello. No questions. Okay. How about we go to charts? That's the positions. If you guys have any questions about the positions, shoot me, a message on the chat, and then I'll answer it at the end. Let's go through some charts. Okay. Charts. All right, so this is SPX this morning. We had a sell-off. We came back. We'll see what happens at the end of the day. Let's go 1 year, 1 day. So this is the 1 year, 1 day on SPX. MACD turned up, obviously. We're coming up to 0. There should be a little bit of resistance. I mean, I'm expecting the reason I put the put debit spreads on, I'm expecting a little bit of a mean reversion kind of a situation here. I think pull back to 5,500 is definitely in the cards, which is the 50 EMA that we went above. I mean, the 20 EMA, but 50 EMA is about 55.71. And that's why I did the put debit spreads, the 56.50, 56.40s at about $3. If we're, max gain on that is 10. So, right, it's the width of the wings, and max gain on the other ones is 20. So, if we do get a sell-off, obviously they will not get the max gain, but they will get close, depending if they get in the money or not. So that's SPX. We're literally back to where we were. I mean, there is more resistance, obviously. There was some resistance at the 200 EMA, which we took out on Friday with the employment numbers. There's some more resistance about 57.81, so I will hold those put debit spreads unless we roll over. There's an uptrend now that we have established, short-term uptrend. Markets coming into resistance. I mean, that's all I'm seeing. And then, on the other hand, QQQ is the same. It looks about the same, but QQQ is definitely coming into resistance here, right about 493 range. And this is the problem, TLT, right? So interest rates for the last 4 days, they're just going up, right? And that trade that I put on, actually I put on the trade right about here last time. TLT was down to 85 and a half range. We rallied to 90, was looking good. Now we're pulling back. I'm not going to panic. I'm not going to do anything about it. Honestly, there's no reason to do anything about it. At the moment, I still think we're going in a slowdown. In a slowdown, interest rates do go down. The administration wants lower interest rates, but then just because they want it, the Fed's not going to do it. Bond market's just saying, hey, no, we're not going to cut rates. There's no need to cut rates. If we do cut rates with tariffs and with economy is doing well, inflation is going to get overheated again, and then we may even have to raise rates. So the bond market's reading this, obviously, and saying, hey, we're not going to mess with the rates. In fact, the bond market's raising the rates. As you guys can see, last 4 days, we had a pretty big move. The thesis behind this is the economy slows down. I'm willing to buy 2,500 shares of TLT at 85 minus the premium. I did it with credits, 275 credit. And why did I do that? Well, 85 minus 275, let's say it's 82. Well, this is 82 where I have my cursor on, right? Going back to 2002, 23 years, TLT was about 82. So if we do go about 5% on the rates, which is 80 on the 10 and 20 year, market's going to tank. There's no ifs and buts about it in my mind. So, interest rates are important for the market. So if interest rates are going up, market has a difficult time going up, period. That's how this works. And, I watch the bond market a lot closer than the stock market itself. Stock market does what it does. It's not my concern. You get in, you get out. That's a different story. But the bond market is telling something here that the stock market listened at 6,100. Is it going to listen at 5,800 or 5,700? We'll find out. Bonds, when we had ZERP for 15 years, were as high as 180. Now we're down to 80. Okay, so I will hold on to this position as long as I don't see the tea leaves turning or changing, and nothing is changing. I mean, we're definitely going into a slowdown. If we go in a recession, bond market's going to rally hard, meaning TLT is going to rally hard. That's why I put the trade on, and this is my lower level. This is my body, 85.95 right here, and I'm short the 110 calls. That's why I was able to create a bunch of credits when I did this. So I'm getting paid to play all the way to March 26th. And is my intent to own TLT at 82? Yes, if it comes to that. If it doesn't, then it doesn't. But let's look at some Mag 7 stocks. Here's Apple. Let's just clean this up. Go to 1 year, 1 day. Earnings were okay, but their service sector is kind of slowing down. I mean, Apple went down to 170, rallied to 210. Now we're down to 190. 200 range still. Higher highs, higher lows. Even with the bad earnings, well, not bad earnings, average expected earnings, let's say. This is Amazon. Same charts. They're all into their 200 EMAs having resistance up here. Apple, same thing. The blue line, this is 50 EMA. The red one is 200 EMA. So we both came on the weaker Mag 7 stocks. We all came up to the resistance, which is 50 EMA. Amazon, same thing, came up to the blue line. We stopped. Although Meta went right through it, right? The Meta is now above 200 EMA and 50 EMA, although still quite far away from its all-time high at 740. I mean, that stock, it's a $3 trillion company, okay? It sold off from 740 to 475. Yeah. And Microsoft, same thing. This definitely is a $3 trillion company. It goes from 455 down to 341. And now we're at 438, above 200 EMA, above 50 EMA, right? So that's what putting the strength in there. This is Netflix. Came and tagged the 200 EMA. If people say technicals don't work, technicals do work. Because why? Because, yes, it tells the past, but then patterns do repeat, and a lot of people watch these things. So, I don't put too much into technicals, but I do watch them just to have a perspective. Netflix came to 832, tagged the 200 EMA, literally tagged it, and then 300-point rally. When you're trading, you got to buy and sell stocks. You can't just hold on to for dear life. This is Tesla. Tesla is either building a bull flag here to break out of. Earnings were horrendous, as we all know. It actually rallied from 216 to about close to 300 with horrible earnings. Obviously, June is going to be a pretty important month because they're talking about the robotaxi coming online. Look, there's As much as I like Elon Musk and I like the cars themselves, we'll see. All I can say is we'll see. It's just going kind of sideways here after that big counter trend move that ripped everybody's faces off. Because if any of you listened to that earnings conference call, it was horrendous. Everything's going backwards in the company, and people go, oh yeah, they have robots, they have this, they have that. Well, none of that is contributing to the company. SpaceX is not part of the company. Neuralink is not part of Tesla. What's part of Tesla? Those are all different companies. Part of Tesla is three things, right? Optimus Robot, robotaxis, and the cars. Well, the cars sales are going backwards, and that's the cash flow that's supporting all the other businesses that are going to contribute. Who knows when? People go, we love Tesla. I'm like, yeah, okay, cool. I mean, earnings are the mother's milk of corporations. If earnings are not there, you can like something because you're biased towards it and you drive the car. Love the car myself, but stocks don't work like that. And a couple of names that had big moves. Actually, Hood is. I really like this company. Earnings are really, really great. That's going to be the next generation's broker, man. I mean, and then there's massive generational wealth transfer is going to happen now, right? From baby boomers to Gen Xers and Gen Zers. And they already have Robinhood accounts, all of them. So I think it's going to be the largest broker. And granted, it's not a Goldman Sachs, obviously, or it's not a JP Morgan, but once Hood, becomes a bank as well, we have different story going on. SoFi, everybody talks about SoFi. I mean, I don't see much about it. I was lucky enough to buy SoFi and do some synthetics on it. Did the trade, got out. Earnings were out. Earnings were okay. It's just kind of consolidating here until probably next couple more earnings come out. Palantir, everybody's talking about Palantir. To the moon. We're retesting 125. Earnings are out after the close today. This is going to moonshot or is going to sell off, right? I mean, but what a move, right? And this one also came down to the 200 EMA, almost tagged it about 60 or 70 range, 68 range, whatever it was, straight up from there. I mean, look, these stocks are moving like pork bellies these days. So if you're trading, you buy and you sell them, we're back to, we took a round trip at 125 to 68 and back to 125 in a matter of literally a month and a half or two. So wonderful, wonderful trading tools. Hims and Hers had some news, massive short positions in the stock. Above the 50, above the 200, it kind of based a little bit on pullbacks. You got to look at Hims, HIMS. Why am I doing WRD? This is WeRide. We're at 690. So NVIDIA is a partner in this company. As I said, this is one of the Chinese autonomous companies. The other one is Pony AI. Symbol is PONY. That's actually that had a massive rally from 4 to about 11.5 to 12. WRD had a rally in sympathy with the other one, but now I'm starting to accumulate shares and do covered strangles. And so this came public actually about 15, went sideways for a couple of months, and then NVIDIA announced that they're investing in the company. Literally went from 15 to 44 in 3 days. And then since then we've been bleeding, right? Selling off with little rallies here and there. But I think at this price, looking at the financials, they're okay. They're not the best because they're losing money, right? But then they have some deals in Dubai, in the Middle East, putting out cars with Uber. There are autonomous cars out there. They're in Europe. They're doing it as well with a lot of partnerships. So at this price, I'm okay with it. I'm buying the shares and selling the strangle. I'm willing to sell the shares at $13.25, or I'm willing to buy more shares with that strangle I put on. More shares at $4.25. Stock is $7, let's say. So I think it's a good trade. Pretty decent risk reward range. And Uber, the one that I'm buying the puts on. Why am I buying puts on Uber? Okay, well, I'm buying puts on Uber. We're just 87 is back here. That was the day actually they announced the massive $7 billion buyback. Well, we're back to 87. Earnings are coming out. The stock was literally 60. Now we're at 87. Earnings are coming out. And every time earnings come out on the stock, okay, this is last time earnings came out. This is another one. Stock actually sells off after earnings come out. So we'll see. We'll see. You know, unless we had already sold off pre-earnings, okay? This is the last time earnings came out. Earnings are coming out on May 7th before the open. Yeah, I mean, just the trade, another trade. We're too far from 200 EMA, 50 EMA, and 20 EMA. So all I'm doing is just buying the 80 puts, which is here. And I'm going to sell the 76, 75, 74, 73, 72 puts. A pullback to probably 75 is kind of expected, unless they completely blow them out. But then again, you know, market does weird things. Palantir earnings are today. If you're I'm not going to mess with that. But I will definitely trade Palantir tomorrow. Either short it, or we'll see. We'll see how it goes, or take advantage of the very high implied volatility. Yeah, Uber, I think top of the range. That's the only reason I did it. I don't know anything else about it, but I mean, I know more about Uber than most people probably, but you know, that's that. And Lyft is 2 days after that. Compared to Uber, Lyft looks completely different, right? One is making almost all-time highs, the other one is struggling down here. So this is DoorDash. DoorDash earnings also are coming out, you know, retesting the highs. Instacart came out, really good earnings after going a little sideways. So my long-term positions, Kava, again, I got really, I mean, actually after I bought it, it went down to 70. So I bought it about 82, right about here, and then rallied to 93, then back to 70. And then now we're at 99, 97, which is fine. Unity Software, I'm long in my investment account. Soxel, I'm long in my investment account. I sold Robin, which was the 2x ETF of Hood. These things are moving. I bought it at 7, I think, and a half range. Went down to 6, then went up to 17. I mean, moves with Hood, right? This is Robinhood, kind of consolidation here. Earnings are out. I like the stock, I really do. And if it does pull back, I'll definitely either get back into Robin or not. On Tesla, I'm definitely going to participate, whichever this flag breaks out. If we break down, and which also will coincide with the 20 EMA breaking down, I will short Tesla. If not, I will buy Tesla. I mean, and then, but instead of buying Tesla, I'm going to trade I'm going to trade TSLL, which is the 2x ETF of Tesla. You can, you know, on quick moves up or down, short or long, you know, the 2x ETFs are proper to trade. Same thing on Apple, same thing on Amazon, you know, all these big names, Google, right? Google earnings were actually fantastic, but then nobody cared. Although it's kind of gathering a little bit more steam here. And I'm long the GGLL, which is the 2x ETF. This is, again, back to SPX. We're at 56.73. Yeah, a little down move. I'm buying put debit spreads, 56.50, 56.40s, and I'm long 5400, 53.80s. I will add to the 56.50, 56.40s around $3. So all I can lose is $3 if the market goes to 6,200 by June. But you know, it's 3,410. So the width of your wings is how much you can make on a put debit spread. And to take care of the decay that's going to happen on a daily basis, I will start selling some put credit spreads way out of the money, collect dimes and nickels and 20 cents and 30 cents at a time to kind of soften the blow on the decay, because these will decay. Decay meaning, you know, time extrinsic value or time premium is going to be taken out of these. And you know, some other stocks I was looking at the quantum computing stocks like Rigetti. I like the setup here. They're going sideways. When these move, they all move together. So another one is ARQQ. Same thing. They're just going sideways, biding their time. Another one is quantum. Not quantum. That's quantum biopharma, but that's also doing well. Qubits is another quantum. D-Wave Quantum, they're all going sideways, and they didn't go down with the market, by the way. So you guys got to pay attention to the outperformance there. So Rigetti is got a massive short position, so those are the ones to watch. Bitcoin is holding. Bitcoin is, really actually not only holding, but it's rallied even with the sell-off that we had. This is the 2x ETF of Bitcoin, IBIT, BlackRock ETF. BITX is the 2x ETF. Sorry, IBIT is 1-for-1. BITX is the 2x ETF of IBIT. Of course, MicroStrategy. They bought more Bitcoin. They have 555,000 Bitcoin now. MicroStrategy had a nice rally, 245 to 400, because Bitcoin rallied, right? So MicroStrategy moves with Bitcoin. I'm DCAing every Monday, $100 worth. I bought Bitcoin in 6 years ago. I hadn't bought. Now I'm DCAing. I'm averaging up actually. So MSTR is strategy now. MSTU is the 2x ETF, and I've been trading this forever now, for 6-8 months. Selling puts, buying calls, getting assigned, selling calls, getting called away, all that stuff. That had a massive rally, 3.5 to close to 9.5, right? Because MSTR rallied. On these 2x ETFs, you guys got to be really, really careful, because there is slippage, because they don't own the underlying, like Tesla. A lot of people will go by TSLL. So let's take a look at that. Actually, that's a good point. I'll prove my point to you guys, what slippage means. So this is 1 year, 1 day on TSLL, okay? Let's take a look at 3-year 1-day chart on TSLL. Okay, so this is TSLL. TSLL is back to literally where it was in December of 2021. Same price, okay? So let's look at Tesla. Okay, so Tesla is 280, let's say. In December of 2021, right, in 2022, Tesla was I'm just going to take back to the same time. Actually, let's just take back to where it was. Let's go to, okay, let's do that. Let's go to January 2023. Tesla was 101. Right now we're at 280, right? More than a double and a half. Okay, this is Tesla. And if you look at same duration TSLL, so Tesla is up 180 points, which is 150% almost. If we look at same thing on TSLL, January of 2023, it was $5. Well, now we're $10. Okay, so one is up 100%, the other one is up 150%. You guys understand the slippage now? That's what happens. So Tesla itself is up 150% or more, 160%. TSL is only up 100% if you bought and held it. So these things are not to be bought and held. These things, on a move on Tesla, this will move twice as much. For example, here, actually you can see the move here better. For example, here, let's look at this date, October of 2023. Okay, October 14th. That's where TSLL was 9.5. And let's look at Tesla. Same time. Okay, right here. October, Tesla was 215. So Tesla goes from 215. This is after the elections, as you guys know. The Trump pump, right? It goes from 215 to 488. So that's about 120% move. Okay, maybe 130%. Well, what happened to TSLL in the same time? Okay, so same time, it went from 10 to 40. You guys understand what's happening here, right? You only buy these things when you think there is going to be a big move coming up and hold them. You can hold them for a couple weeks, 3 weeks, a month, whatever, but you cannot hold them for years because the slippage is going to wipe you out. So, but on this move up, I'm expecting a pretty big move on Tesla, up or down. After the earnings, we had a nice up move. Obviously, now we're consolidating, going sideways. On a breakout of 300, this thing is going to go probably 350, 360. Well, if this thing is Tesla goes to 360, that's 20%. What's going to happen to TSLL? It's going to go up 40%. Okay, well, it's going to go from 10 to 14. At that time, I'd rather be in TSLL stock or options. That's the whole idea here. That's all we're trying to do. So, so the same thing happens with MSTR and MSTU. Same thing happens with Apple. Same thing happens with NVIDIA. Oh, I didn't look at NVIDIA. Let's take a look at NVIDIA. And then I'll answer some questions and say goodbye and go have a cup of coffee. So NVIDIA, again, just like Amazon and Apple, under 200 EMA, but kind of hanging in here around the 50 EMA. MACD is on all of them. MACD, except with the exception of a couple, MACD is coming back up to zero. It's been under zero for literally like 2.5 months now. Zero obviously is going to be a little bit of resistance if you understand how MACD works, and they all look like bottoming, formations, but we'll see. The market's going to tell us what all these stocks are going to do. So yeah, that's where we are. And with the 2x ETFs, by the way, okay, so let's look at NVIDIA. NVDL is the 2x ETF, bullish ETF of NVIDIA. Okay, let's take a move. Let's see where it went. So today, this day right here, I'm just going to pick a day, which is, this is NVDL 2x ETF. It's January 7th, 2025. Okay, NVDL is 85. Let's look at NVIDIA. January, same day, right here. January 7th, NVIDIA was 153. Okay? All right. Let's look at today. Today, we are May 5th. NVIDIA is 114. So 153 to 114, let's say 113 is 40 points. That's about 30% down, right? Okay, so your expectation should be NVDL should be down 60% because the 2x ETF. Well, let's take a look. NVDL, it was 86, and now we are 38. Well, we're down like 65, 70%. So you see what I'm saying? The slippage? Because none of these 2x ETFs own NVIDIA shares. They own swaps and they own options. And every time they roll, they're going to lose money. They're losing, extrinsic value on these things every time they roll. So you must understand that these things need to be traded. Even NVIDIA has to be traded. Stocks are to be bought and sold, okay? So be careful with these 2x ETFs. They're not to be bought and held for long, long periods of time. Like Tesla could be going, or NVIDIA could be going sideways here, and this will lose value, period. Math don't lie, so don't fool yourselves. But that's where we are. Anyway, okay, so no questions? Nobody wants to come on? You're all shy? Okay. All right, that's where we are. And let's take a look at one more time to the positions. Maybe I'll do some... all right, let's see where we are. Nowhere on this, nowhere on this. Yeah, TLT break. Wow. TLT breaking 87 now. We're at 86, 89 now. Only up $500 on that. Do I let it go from big green to red? That's the question. My rule of thumb is no. Don't do that, Serge. But we will see. And I will actually buy more put debit spreads now on SPX. There's something needs to give up here. Either TLT needs to rally or market needs to pull back. Uber 86.31. Let's see where the options are. Yeah, I bought them. Yeah, I just bought them. So I may actually, yeah, let's do that. Let's sell these puts. puts, and I'll add to this position tomorrow or today. I will 86. Yeah, 46% on the long ones, 101+% on the short ones. I will do that. I will sell. I'll lower them in a nickel. Let's do some selling. Instead of 55 cents on the 76s, I'll sell them at 50 cents. These are the 76s. I'm long the 80s, selling the 76s. Lower those to 50 cents. Let's lower these. Let's lower the 75s to 40 cents. We'll get those off and then those are done. Let's lower from 45 to 40 cents. You guys understand what's happening here, right? Okay, we did those. I'm staggering them. So these are most likely going to expire worthless. So I'm lowering my cost on my long side. Let's leave these at 35 cents. These are at 25 cents. Where did I put those at? 30 cents. Yeah, let's leave those at 30 cents. Okay. And we have 5, 10, 15, 20, 25, and we're long 25. And we have 10 more to go if the stock rallies. Okay, that's good. So I'll sell the rest of the puts. So I'm selling 76, 75, 74, 73, 72 puts. You're going to say, why don't you all sell 76s and 75s? I could do that, but I choose to not to. Yeah, I think, yeah, that's the proper way to do it. Stagger them down. What else is happening? Yeah, I need to make up my mind on this TLT trade. Am I completely wrong, or am I going to just hold it until March and see what happens? Because if we do crack below 85, it's not going to bother me, but what bothers me is having a $5,000 green trade go into red potentially. And I tell my group members every time, don't let green go to red. And am I about to do that? Well, you guys will find out if you're a member. And yeah. So these are at 35. That's fine. Yeah. 30 and 25. That's not enough money, 20 cents, but let's just leave them there. I have one more day to figure that one out. So that's Uber. And this is SPX. Hopefully you have some questions. If you don't, I will see you. I will see the members on Wednesday. So let's do that. Let's clean that up. Every Wednesday, I do a members only live. If you choose to become a member, please click join. Email me. I'll email you the Telegram chat group link. Every Wednesday, I do a members only live. They get the replays as well. It's more of one-on-one interaction. So support the channel that way. Otherwise, put a thumbs up on your way out today. Please share. I think I'm putting out really good information. Yeah, see the members on Wednesday. See you all on Friday at Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Since nobody wants to come on and keep me company today, I'm just going to leave. Maybe instead of leaving, maybe I'll just leave the live stream on. What do you guys want to do? Watch my mug or go do your thing? Probably go do your thing. All right, I'm going to end the stream here. So those are the positions. Go check the community page today after the close between 1 and 2 o'clock Pacific. I will post all these positions. If there's any changes, there's changes. And again, none of this is trading or financial advice. I do things that most people should not be doing because my risk tolerance is different than yours. My account size is different than yours. If you're going to duplicate all these things or tag along, do it at your own risk, do your own due diligence, and that's it. So you all have a great week. See the members on Wednesday. See the rest of you after the Fed meeting on Wednesday, on Friday for Power Hour. Bye now.